Euro dollar. So the euro clearly has shown just how well capped and how strong that resistance is up towards 115 after the market stalled out back in May, June, September, and then October most recently. The setback in October has resulted in these latest sharp declines, with the market now trading back down towards and through key medium-term support at 110.87. Setbacks have extended on early Friday trade, and early Friday trade down to as low as 110.70 about thus far, and it'll be interesting to see if the market can close below this previous medium-term resistance at 110.87. A close below 110.87 will open the door for a fresh downside extension back down towards next critical support in the form of the July low at 108.09. At this point, only back above 115 ultimately takes the pressure off the downside and will compromise this bearish outlook. Look for rallies to be very well capped now up towards the 113 area. Sterling dollar. So cable saw a very sharp and intense bearish outside day formation in Thursday trade after the market stalled out yet again above 155. The 155 area has proven to be a very formidable cap, and this suggests that the market could be poised for a lower top in favor of the next downside extension back down towards and eventually below the most recent lows in September at 151.07. Ultimately, though, only back above 156.59 would compromise the bearish outlook. Dollar yen. So although we've seen a sharp appreciation in dollar yen over the past several sessions, the market does remain confined to a broader consolidation over the past several weeks, and within this consolidation we're seeing a gradual trade lower with a potential lower top now in place just by the most recent high early Friday at 121 ahead of the next downside extension. At this point, look for deeper setbacks from here back down towards and eventually below that August low at 116.12. Ultimately, only back above 121.74 would compromise this outlook and put the pressure back on the top side. Euro Swiss. So Euro Swiss has been mostly locked and confined to a consolidation over the past several months, although the market remains locked within a broader recovery and deeper and a more significant appreciation is favored above the recent high that we saw at 110.50 and towards 112 further up. At this point, only back below 107.14 would compromise this recovery outlook for Euro Swiss. Aussie dollar. So Aussie remains confined to a more well-defined longer-term downtrend, though we have seen a recent recovery over the past several days. But at this point, look for these gains to continue to be very well capped below some medium-term resistance at 74.40, with only a break back above this level to compromise the bearish outlook. Dollar CAD. So dollar CAD has seen a nice bounce in recent sessions off of some previous critical resistance now turned support in the 128 area. This suggests that a higher low is now in place ahead of the next upside extension and bullish continuation beyond that recent 11-year high at 134.57. Kiwi dollar. So Kiwi has been very well bid off those recent multi-year lows, though the market is running into some key resistance now as it approaches the 70 area, which represents a critical 50% Fibonacci retracement off of the move that we saw. That move that we saw from the highs going back to April down to the recent low that we saw in August. At this point, only a close back above 70 would compromise the bearish outlook. SPX 500. So the S&P 500 has been surging over the past several days, with the market really extending its gain off that extreme August low at 1833, now trading back up well above 2000 and approaching critical resistance at 2072 in the form of the 78.6 fib retracement off of the record high that we saw earlier this year back in May down to that August low move. At this point, only a close above that 2072 76 fib retracement would really suggest that the market is poised for a more significant bullish resumption back towards the record high, while inability to establish above 2072 will suggest that the market is looking for a lower top in favor of a bearish continuation. Gold. So although we've seen setbacks in gold over the past couple of sessions, the recent recovery and break above 1170 is significant and opens the door for the next major upside extension towards 1233 further up. At this point, look for any setbacks to be very well supported above 1135, while ultimately only a close below this level would really delay the recovery outlook for the gold market.